In today's video, we're going to take a look at the crude oil market and the symmetry in that market. And I'm also going to show another example of a trigger, as there are still some people that are confused. And we're going to start with a 120-minute chart in the March crude. I hope I'm looking at the right contract at this point. But the general pattern is, bullish pattern of higher highs and higher lows. And every time that we see a pullback, what I do is I take these prior declines and some of the swings within the swings, and I project them from any new high, and I look for possible support. In this case, we did take out some of the top end of support, but we still saw some symmetry with some of these prior declines. So if you look at this high to low, this was $2.46, kind of similar to a couple of other swings here, like $2.61, $2.65, and $2.66, and then there are some swings inside of the swings that might even be more similar, because bottom line, taking all of those swings, we had basically a cluster from the 53.02 to the 53.28 area, and the actual low was made at 53.29. So there's actually a swing in here that was almost equal to this decline. And what did we do? We hit, we held, and it triggered an entry. Okay, so when it triggers an entry, then what you can do is go to the lower time frame chart to look for the entry, because you want to get triggered into the trade as close to where the risk is as possible, right? So if the risk is against this 53.02 to 28 area, I'm not going to wait for a signal on a 120-minute chart. I want to go down to a minute chart or a 2-minute chart or a tick chart or something like that. Now in this case, we did, we hit and we held. We did start to see a nice little rally. If we get the full move, our typical target's going to be the 1272 extension. And I did actually look to see if a 1-minute chart would have been valuable for this, but I think I found something that might be better, and I took a peek at the 144 tick chart. So the low was made at 53.29, so that was, pretty much right over here. And you can see that, as you're trading straight down into that area of support, we finally did end up seeing a moving average crossover to the upside. I used the 834 EMA crossover. And then in the process, I also want to see that it takes out a prior swing high, so that, it's a shift in pattern from lower lows and lower highs to higher highs and higher lows. So that also suggests that, we might put in a low at that time. So now you're getting triggered into the trade relatively close to where the risk definition is, and your initial stop can be placed either under this low or underneath the low end of the zone, which would have been 53.02. Just depends on how you want to write up your trading plan. But that's what you want to do with this work. The way that you make money with it is setup plus trigger equals trade entry, and then you manage it. And we never know what the market's going to do with a particular setup. I mean, we can have an idea of what we would typically see, like a 1272 extension, but as usual, you had a nice rally off of this area, but there's no way that I can tell you that it's definitely going to go to the next target. So I did rally $1.58. You want to ratchet up stops as you go. I know that a couple of my people in the room today did look at a trade against that zone, and well, hopefully we'll get the follow through. If we do, 56.42 is what I'm looking for.